Welcome to another AriasWave update. Okay, so this is an XLM price action update, and really not much to be said right now in terms of this price action. I mean, we're looking for a 1-2-1-2 to the downside, and basically the reason why I haven't been posting much about XLM is because it's basically not doing much. But if we're going to take the approach of at least looking at the smaller degree waves, then perhaps some small short trades could be in order if we were to do so. Okay, so having the 1-2-1-2 pattern, okay, let's just say, for example, this wasn't a 1-2-1-2 pattern. Okay, first of all, let's just look at it like this. You've got let's just say this was an A wave, just for argument's sakes, right? Uh, is that the B wave? Is that the C wave? Um, well, if it was the C wave, it'd have to end around there. So it'd be like a really tiny C wave. But there's a problem with this, okay? Let me explain. So if we go down to the hourly chart, okay? Number one, B wave, C wave. Well, the C wave completed maybe around here, potentially, if you were to call that a C wave, right? Except there's a problem with the correction within the perceived wave 5, and this is what I try to tell my members, uh, or everybody originally, is that um, there is further downside expected due to the large account. But if you wanted to look deeply into the waves, right, you can't complete a wave unless there's a certain amount of corrective patterns. So in this case, let's just say you had a one expanded to 3. Okay, 4 would be absolutely massive because this is wave A. Where's wave B? Okay, wave B is the problem here. So my understanding is this: short-term trade is possible because now we're looking for a B wave, and A wave happened for the B wave, right? This move here, and then we had a pullback, and now we're going to look for the C wave. Okay, I know this might sound a bit weird, and the waves might look a bit big, but if we're looking at a larger downturn movement, if you zoom out to the larger degree, this looks like nothing. But because we're really zoomed in, and we can use leverage and all that sort of stuff, well, actually we're in a pretty good position here because we're not far from the top, and we're hitting some resistance at 0.786, and we've seen a 5-wave move. So in saying that, what comprises this pattern here? So let's take an even closer look. Okay, straight off the bat, I can see, I suppose it looks like a 5-wave move. Sorry, a 3-wave move. 3 waves there, 3 down, 5 up, 3, 3, 5, and then I believe it's 3 down. Actually, is that right? 3 down, 5 up. Okay, so 1, 2, 3, 4, 5. Now this could be wrong. Like I said, looking at small degree moves, never easy, right? And there's another way you could look at this, right? So this could be A wave, and then you could have 3, 3, 5, 3, 5. Okay, go ahead, practice how you look at these moves. The only thing I suggest you do though is make sure that all the corrective patterns are in there. Otherwise, you're practically barking up the wrong tree. Now, it is getting a little bit sharper here, and I don't know what that means in terms of RSI because I don't use it. Sometimes for wave 3 price action I do, but the fact is that we still have this A wave and we haven't had, you know, a move down to complete another zigzag. And yet we've seen this zigzag. So is this really um, like, for example, is this really a 3-3-5-3-5 pattern, right? The worst case scenario is that it's a 3-3-5 and then unfolding 3, which still makes sense because you had A and then you got your A, B, C. It'd be just like a really expanded B wave to the downside. The only problem is that does not look like a 5-wave move. So that kind of gets ruled out. Looking for a 1, A, B in progress. Okay, so not all cryptos follow the same pattern, right? Maybe over the long run they do, but in the short term, that's that's the edge that you got to find, right? You got to find that edge as to where you're going to pull a small profit from, especially if you're doing some futures trading, leverage trading, right? Because in a bear market, or in, well, especially in a bear market where price tends to slow down after a deep, sharp decline, well, the sharp decline needs time to consolidate for the next move down. So it just gets really slow. Whereas in an impulsive move to the upside, it's more of a balanced move up. Gets a bit of a correction, moves up, correction, moves up. But the moves down in markets are so severe that they need a bit of a consolidation period. Now, making sense of that consolidation period is obviously what AriasWave is all about. Now, in this case, what I'm saying to you is that there's a very small risk here, right? If you short this, you're only risking a little bit to get, you know, risk reward is there, you know? So that's the type of thinking I have here. So my stop would be at about 0.1177 and my target would be around 0.09 at this point. Okay, and then there's other waves that follow, etc., etc., etc. But that's obviously in the future. We don't worry too much about the future at the moment. So even if you because like I'm telling you, small degree moves are complex. You can spend hours figuring this out. And I mean, you can do that and that's fine, but you can shortcut that method by looking at all the previous waves, 5-wave move, 3-wave move. What's next? 3-wave move, right? So yeah, sure. You can definitely practice your wave analysis by looking at the small corrections, but think about the larger correction. Think about the bigger picture, right? That's what it's all about. It's about the bigger picture. So as long as we have the directional bias to the downside, then we can go back against the trend in a correction. But then when the next move down starts, it doesn't just go boom down in a straight line, especially when there's other cryptos and other factors in the market that are keeping this thing kind of not falling straight away, right? But when that moment comes, when the markets do decide to go straight down, well, you're going to have a lot of corrective patterns already completed in different markets, in different coins. So this is the approach I've decided to take now. Take profits where you can, right? If you feel like a move has reached the end of its course, a 5-wave move, and now you're starting to see consolidation, that's fine. Take some profits. Go to another coin, look for a setup, trade that, and then you can go back to the other market. And if you see something that's worthwhile, trading again uh, with a good setup, especially the AriasWave setup, well, you're going to have a smaller stop and a larger gain. So you got nothing to lose, especially if you play it smart from the beginning before you deplete your capital. So that's all I'm going to say for this one. Um, I'm pretty sure I've explained what my plan is here. And if it doesn't work out, it doesn't work out. Big deal. Your risk is minimal. Um, Leverage trading is a risky business, so be careful. I'm not a financial advisor. Just make sure you understand what trading futures is, and I use Binance, by the way. I'm not associated or affiliated with Binance. I do offer a referral code, you know, to my members, but I don't really share that on here or anywhere apart from on my members portal. But the point is that when you learn a platform, and especially if you try to apply for a platform, they're going to ask you a series of questions. You need experience. You need to have records of, nominal, uh, I think it's notional value of like 1 million, uh, 1 million in volume, notional value, notional volume of experience to actually, for them to actually let you have an account. There's pretty decent regulation around that. But once you play the game, it's much better with cryptos because you get better returns much faster, right? When I designed AriasWave, it was all based on futures, but your returns were like abysmal unless you were really good, but you were waiting for that return to take quite a while. So if you do that with cryptos, mixed with AriasWave, mixed with a futures platform like Binance, you can make hundreds of dollars a day or every few days or whatever, because it depends on how savvy you are with looking at different markets, right? Because you're not going to find a setup every single time, right? You might win some, you might lose some, but as long as you keep your risk reward, you know, uh, you know, organized, and you know, basically you can do pretty well, right? And there will come a time where you can just hodl. Hodling is great, but during the time when you're waiting for that bottom to occur in the whole market, might as well try and practice your wave skills and make some money along the way. So if you're interested in that sort of thing, head over to ariaswave.com. I created this program that will help you. It's not Elliott Wave, it's way better than Elliott Wave. And there's a private Facebook group where you can talk to other people who know AriasWave and who are still learning it. And you also get exclusive, content. So hopefully you found this video interesting and informative. Thank you for watching.